US billionaires are sitting on roughly $8 trillion, and almost none of it is cash. It is not in a checking account, it is not in a vault, it is not even really in the bank. It is in stock, shares of the companies they built or bought. And the whole game, the entire reason the richest people on Earth can pay a lower tax rate than the person who cleans their office, comes down to one rule almost nobody outside that world ever explains out loud. They never sell it. Let me show you the machine, step by step, because once you see it, you cannot unsee it. Start with a number. During 2025, US billionaire wealth jumped from about $6.7 trillion to around $8.2 trillion. That is a gain of roughly $1.5 trillion in a single year, a 22% jump, spread across a little more than 900 people. Now, ask the obvious question. If your net worth went up by $1 billion this year, how much tax would you owe on that gain? For most of these fortunes, the honest answer is almost nothing. And that is not a loophole someone snuck in. It is how the system is built. Here is the foundation. In the United States, you are not taxed when your stock goes up. You are taxed when you sell it. The increase in value while you hold it is called an unrealized gain, and unrealized gains are not taxed at all. So a founder whose shares climbed from $1 billion to $50 billion owes zero income tax on that $49 billion increase, as long as the shares just sit there. The moment they sell, the bill arrives. Long-term capital gains tax, up to about 20% federally, plus an extra 3.8% surtax, plus state tax on top. So selling is the single most expensive thing a billionaire can do, which leads to the first move in the strategy: buy, and then never sell. But that creates a problem. If your entire fortune is locked inside stock you refuse to sell, how do you actually buy anything? The mansion, the jet, the campaign donations, the grocery run. You still need spending money. And this is where the second move comes in: borrow. You walk into a private bank. You do not sell a single share. Instead, you pledge them as collateral. You say, "Hold these shares and lend me cash against them." The bank loves this. Your stock is worth tens of billions, so a loan of a few hundred million is barely a risk to them. They hand you the money at a low interest rate, sometimes lower than a normal mortgage. Now, pay very close attention to the next sentence, because it is the heart of the entire thing. A loan is not income. When the bank gives you borrowed money, the IRS does not count it as earnings, because one day you are supposed to pay it back. So that cash is not taxed at all. You just unlocked spending money from your fortune, without selling and without triggering a single dollar of income tax. A normal worker earns a salary, and the government taxes it before the paycheck even lands. A billionaire borrows against assets, and the government taxes nothing. Same lifestyle, opposite tax bill. And this is not a theory. You can read it in public filings. Tesla's own SEC disclosures show Elon Musk has pledged a massive block of his Tesla shares, hundreds of millions of them, as collateral to secure personal loans. ProPublica reported the pledged amount at one point was worth tens of billions of dollars. Oracle's filings show Larry Ellison has pledged around 30% of his entire Oracle stake, about 346 million shares, again, to secure personal indebtedness. Oracle even wrote a special rule that lets Ellison pledge shares while banning every other executive from doing the same. These are not rumors. These are signatures on documents filed with the regulator. So now they are living large, spending borrowed money, paying little or no income tax, and their stock keeps climbing in the background. But there is still a catch, right? The loans. Eventually, someone has to pay them back. And here is the third move, the one that closes the loop and makes the whole thing almost perfect. Die. When a wealthy person dies, their assets pass to their heirs. And under current US law, those inherited assets get something called a stepped-up basis. In plain English, the tax clock gets reset to zero. Imagine the founder bought stock that was worth $1 billion, and it grew to $50 billion over their lifetime. That $49 billion gain was never taxed because they never sold. When they die and pass it to their kids, the cost basis is reset to the value at death, $50 billion. The $49 billion in gains that built up over decades? For income tax purposes, it simply vanishes, erased. The heirs can then sell the shares, pay off the loans, and owe little or nothing in capital gains, because on paper, there was no gain. That is the strategy with a name. Buy, borrow, die. Buy assets and hold them so the gains never get taxed. Borrow against those assets to fund your life tax-free. Die and let the step-up wipe the slate clean for the next generation. Now, how much does this actually save them? ProPublica got hold of leaked IRS records and ran a calculation they called the true tax rate. They compared how much the 25 richest Americans paid in federal income tax against how much their actual wealth grew over the same years. From 2014 to 2018, those 25 people saw their combined wealth grow by $401 billion. They paid $13.6 billion in federal income taxes. That works out to a true tax rate of just 3.4%. Look at the individuals. In the years studied, Warren Buffett's true rate came out near 0.1%. Jeff Bezos paid zero federal income tax in 2007 and again in 2011. Elon Musk paid zero in 2018. Meanwhile, a teacher, a nurse, a plumber pays a far higher share of every dollar they earn. Now, to be fair, there is a real debate here. Some economists argue the borrowing part is overhyped. They point out the truly ultra-rich often do not borrow that heavily compared to how fast their fortunes grow, and that the biggest trick is really just the first and last move, never selling, and the step up at death. One analysis found top wealth holders borrow only about 1 to 2% of their economic income, while their untaxed gains are 20 to 40 times larger. So the borrowing is the spending bridge, but the never taxed gains are the ocean. Either way, the outcome is the same. Enormous wealth grows, and almost none of it is ever taxed as income. And one more thing to be clear about. Everything I just described is legal. No one is breaking the law. They are using rules that already exist, exactly as written. That is what makes it so powerful, and so hard to undo. Lawmakers have floated ideas to change it, taxing unrealized gains for the ultra-rich, or ending the step-up at death, but so far, the machine keeps running. So zoom all the way out. When you picture a billionaire, you probably picture cash, stacks of it, gold, a giant pile of money. But that picture is wrong. Their fortune is mostly stock they will never sell, borrowed against to pay for everything, and handed down with the tax erased. You get taxed the instant you earn. They built a world where the money never technically arrives. It is not that they found a secret. It is that the rules were written for people who already own the assets, and the rest of us were taught to just keep earning. If this changed how you see wealth, follow for a new story every day.